Hello, my lovely family. Welcome to my YouTube channel. In today's video, I'm going to be talking how some errors can actually cause an enterprise. How some errors committed by accountants can actually make some people lose their jobs, some people not to have money, some people not to be able to feed their families. That is accounting errors. Before I continue, please thank you for always watching, and thank you for watching, and please watch to the end so that you can tell somebody to avoid the errors, or you yourself you can avoid the errors, because these errors can equally affect your finances if you are not careful. And if you are coming across this video for the first time, please don't forget to subscribe to my YouTube channel, like, comment, and turn the notification bell on. To begin with, we have the first error, which is error of principle. So I'm going to be talking about these errors using the accounting terms and in accounting context. So you as an individual, you can use this same error, you can relate them to your personal finances if you are not an accountant, if you are not keeping records, if you are not operating any business or anything. You can use them, you can relate them to your personal finances. The first thing is, the first principle, like I earlier said, is error of principle. No, principles are rules and regulations. So there are rules. For example, you have accounting. It also has rules. It also has various types of accounts. So we have assets, we have liabilities, we have expenses, we have revenues, we have capital. So there are principles guiding these various classes of accounts. So when it concerns error of principle, it simply means a wrong account is recorded in a wrong class. For instance, you carry expenses and you record in assets as assets account. Let me just give an example. You have purchases of furniture by cash. Now, you actually create an account for cash and you credit it because cash is decreasing. On the other hand, instead to create office equipment, you create an account for purchases. That purchases is just purchases of goods, and which is the main expense of a business, is the trading activity of a business. So once you carry an office equipment and you send to a purchases account, actually you have overstated purchases account and you have understated office equipment, you have understated the fixed assets, thereby causing the income statement to understate profit. The gross profit will be understated and the net profit will equally be understated. In OHADA accounting, we have the different classes which are being set up. You have class 1, which is the permanent resources, class 2, the fixed assets, class 3 is the inventory account, class 4, the third party account, class 5, the treasury account, class 6, which is the expenses account of ordinary activity. That is for a normal activity, the main activity of the business. What the business is actually doing, that's their normal activity. And then class 7, which is the revenues of an enterprise, normal activities of a business. Then class 8 is the expenses and revenues of ordinary activities. Then we also have class 9, which is used for cost and management. We hardly use this one when we are teaching our learners. So this error of principle will actually affect the classes of account. That is, if you carry the class 2 account and you record in class 6, you say class 6 is a class of expenses. So it will overstate the purchases and understate office equipment. So it's an error which is actually committed, but this error will not actually affect the trial balance because all of them, they are one type of account. Assets and expenses work has one and the same principle. They increase on the debit side and decrease on the credit side. Then we have the next error, which is error of omission. This is an error committed when a transaction has been completely omitted from the books. For instance, we have cash sales of goods to the customers. And if this transaction is completely omitted, that means it is not recorded. It is equally going to affect the results of that enterprise, because sales will be understated as well as cash will equally be understated, which simply means the physical cash will be showing something higher than what is there in the books. And you now, as a bookkeeper, you keep on struggling to look at what is happening to discover the error. So once you discover the error, there are ways to correct that error. And since this error has been completely omitted, this error cannot equally affect a trial balance. You have the next error, that's the third error, which is error of commission. This is an error committed in an enterprise by the accountant where the wrong account of an individual has been recorded in a wrong account of another individual. Remember, we have the personal accounts. These personal accounts are accounts of natural persons, artificial persons. So we have the artificial persons and natural persons are made up of customers and suppliers. Remember this type of people. Let's take natural persons. Their names can be almost the same, because as for artificial persons, the law don't give rights for another person to register a business in the same jurisdiction with the same name that another business has been having. So let's take a case of artificial persons. If we have Amadu and we have Adamu, we have, sorry about that, we have Amadu and we have Adamu. These are similar names. So you will discover that in the case of recording a transaction, maybe if Amadu and Adamu are both customers, instead of recording in Amadu's account, you go and record in Adamu's account. It is going to also cause trouble, because this customer may also pretend that since you have made an error, the customer may also pretend or also commit an error by not recognizing that he or she is owing the enterprise. And that money may go like that. It becomes a bad debt, and you yourself, you will suffer the losses as a businessman. We also have Bu and Ba. We also have Nga and Go. These are names that are similar. So if they are also, if these names also they are similar, like Ba and Bu, the difference is just U and A. So if these are two suppliers, instead of recording something in Ba's book, you go and record in Bu's account. Actually, you have also equally overstated another supplier and understated another supplier, which is not going to equally affect the trial balance. But these errors can also be corrected, which I'm going to show you in the next video on how to correct the various errors. We also have the next error, which is error of transposition. This is an error committed when an amount has been transposed, that has been displaced. This amount has just been displaced. That means this digit has taken this, the digit A has taken the place of digit B, and digit B has taken the place of digit A. That's transposition. that have transposed this account. For example, we have cash sales of goods, 615,000. In the case of recording this 615,000 in both accounts, you transpose the 15,000 to 51,000. It becomes 651,000 instead of 615,000. You see that 1 has taken the place of 5 and 5 has taken the place of 1. These errors, once committed in both books, cannot equally affect the trial balance. Then we should know that this error of transposition, once you look for the difference to adjust the error, the amount is always divisible by 9. That means once divided by 9, it will give you an answer without any remainder. Then we have the next error, which is error of original entry. This is an error committed when the wrong amount has been recorded in a wrong account or the wrong amount has been recorded initially from the source document. It is committed from the source document. Like for instance, instead of 615,000, you record 516,000. You see, they are the same figures, but it is not transposition because it is an error that has been committed. Or instead of 600,000, you record 60,000. That's an error of original entry. And also know that this error must be committed from the books, from let's say from the source document. And the error can equally be corrected. And if this error affects both the debit and the credit, it will not equally affect the trial balance. Then we have the next error, which is error of compensation. This is an error committed when 2 or more errors have been committed on both sides, on the debit and on the credit. Let's just take for an instant, if at the end of the period you discover that purchases of goods has been overstated by 50,000, and equally on the credit side, sales of goods has equally been overstated by 50,000, you will see that the error has the same amount and it is affecting the debit and the credit. It's an error. So many errors have been committed, 2 different errors. That is not even in one transaction. But these errors cannot equally affect a trial balance because it is on both sides. And remember, a trial balance is an account which confirms the double entry principle, the arithmetic accuracy of calculating the ledger account. We have the next error, which is not the least, but it is going to be the last for me. It is the error of complete reversal of an account. Let's say we have payment of suppliers by check. You will see that the supplier's account is supposed, normally the correct way to record is we are supposed to debit the supplier's account and credit the bank. But instead, we go and credit the supplier's account and debit the bank. That's a complete reversal. We have just reversed all the 2 accounts. So this will not equally affect the trial balance. However, there are errors that can affect the trial balance. And when these errors are committed that will affect the trial balance, it means the trial balance, one side will be higher than the other. So we need to adjust the trial balance. An account used to adjust the trial balance for further preparation of the financial statement is an account known as suspense account, which will be stated in the next video. The errors that can affect the trial balance are known as one-sided omission, one-sided commission, one-sided error of principle. All the above errors, once they are committed one-sidedly, they will affect the trial balance. And we also have wrong calculations. If we were to balance off our account, we do not balance it off well, it is going to disrupt the trial balance from being equal, from respecting the double entry principle, which states that in each given transaction, there must be at least two accounts. One must be debited and the other credited. So since it's not going to affect, since it is going to affect the trial balance, we need to use a suspend account to correct it. I'm going to end here for today. Stay tuned for the correction of errors. I'm going to take an application exercise on how the errors that were discovered and how the errors are supposed to be corrected, and also show how errors that affect the trial balance are committed and how they are corrected using a suspend account. Thank you for watching. I love you all.